Welcome to Front Range Facts. This is Anthony Meisner.
And this is Jim Merrion.
We're going to get into our local market updates. So let's just take it away with some really fascinating stuff we found. And right here, Denver Metro single family median sales price, days on market, they're all kind of falling in line with right where we were at the beginning of last year.
Yeah, we've got a $600,000 median sale price for the Denver metro market, which, from a standpoint of, where things are at, we've been talking in our last episodes about prices being more around where, things were in November 21 to January of 2022. And it puts us essentially square back into that. So you can kind of see where we've been coming up with those ideas. And projected increase in home prices for this year. Basically looking from October 2022 to October 2023. And this looked at the most populous 100 cities in the country, puts Denver at about a 0.4% price increase over those next 12 months. So 70 out of 100.
70 out of 100.
Yes.
This market's resilient.
Yeah.
I think they're probably discounting it a little bit, but honestly, that's a good sign, right?
Yeah.
Flat market wouldn't be such a big deal with all these
Chicken Little stuff, sky's falling. It's okay. Your home prices are going to maintain, folks.
This one though, what is going on with the small market?
This is cool. This is really cool, Anthony.
It's so cool.
So what this looks at is small metro areas are places like Boulder, mid-size, places like Fort Collins, large size, or places like Denver. And what this looked at is most stable housing markets in the entire country. And what's number 7 there, Anthony?
Well, have you ever heard of 7 markets in the country having a 0.0% chance of home depreciation? Well, Boulder's one of them.
Yeah.
So hopefully you own real estate somewhere near Boulder.
So this is the idea that, is there any chance that, home prices would drop 5% or more?
Right.
And Boulder comes in at a 0% chance. And,
Well, the data goes back to 2000.
Yeah.
So it basically goes through the big last Great Recession and kind of taking some of that into consideration along with all the other years.
Yeah.
Fort Collins came in 7th in mid-sized metro markets. So, of course, a little bit more chance of some volatility there. But yeah. I think most mid-sized markets, there was only, these small-sized markets that had 0% chance.
So that's a blue chip investment right there. When you have a 0% chance of losing 5% or more,
there you go.
That's considered blue chip, folks. So if you want to put your money somewhere safe and have great price increase,
estate in Boulder.
Let's go to Boulder, because not only is Boulder chances of dropping 5% or more is 0, but check this out. There's a 227% gain in prices during that time frame from 2000 forward. So talk about blue chip. This is the only market out of those that had a 0% risk.
And look at
to have that
largest
kind of gain.
Price drop from basically right into 08, 09 would have been $25,000 and it happened for a short period of time. Ever since, 227% increase in sales prices.
Fantastic.
What a great spot to put your money.
Absolutely. So let's look at Denver for a second, since it is a larger size one. We were talking small and mid-size before. So their chances of having a price drop of 5% or more is 33%. Their largest price drop, though, so far is $33,000, with a median home price right now about $620,000. And their prices have also gained quite a bit, 220% increase.
Number 30 in the country.
So very stable overall, folks. And then, Anthony, we wanted to dive into a little bit about the greater Denver metro areas, market snapshot for detached and attached single-family homes. So year-over-year price changes. What can you tell us about all this?
Yes, you can see that green line there is our inventory situation. Over the course of this year, where we went from 3% interest rates to 7% interest rates, it really pulled some buyers out of that market. You saw a really big rise in inventory there, but all it did was take us from scraping the bottom of the barrel back to at least functional inventory levels, right? And then in the last 2 months, you saw a lot come off of the market.
Yeah.
You definitely saw some stuff go under contract, but we're going to be back off to the races. We're getting into some seasonality, right? This is some normal seasonal kind of market behavior. So we're going to be rising inventory going into 2023 with a reduction. I mean, we're basically showing 30% drop last month in, year over year pendings and solds.
Yeah. And then month supply of inventory, yes, we have seen with that, influx of, interest rates increasing things with it taking longer to sell. But again, we've got a 1.13 months of supply for detached and attached blended together, with the Boulder County in the metro area being 2.34 months of inventory is the highest amount. So still very much seller focused market. But you have the benefit of the fact that sellers have been a little bit spooked lately, so they're willing to do more than they would normally. I mean, if this was 2018 or so, you wouldn't have got these considerations that you're getting now with seller concessions for rate buydowns and whatnot. So it's a really sweet time to be a buyer.
It's a really great time to be a buyer. All right, so in this next slide, we're going to talk a little bit about the days in MLS. This is active to under contract time across all of the metro area. It's only 41 days. I say only because even though the last couple of years have been a bit of a frenzy, this is just getting us back to 2018, 2019 levels. And it's the first time we've been back to 2018, 2019 levels.
Well, and like if you compare this to where the beginning of this chart begins at January of 2020 at 44 days, still below where it was pre-COVID, right? So
absolutely
lots of room to maneuver still. So it's increasing, but it's such a minor wiggle, it doesn't really matter too much. And then Anthony, we've got right now price ranges, a little bit breakout by that.
Yeah, I think the easiest way to have this conversation is with rising interest rates. It makes that affordability crisis a little bit more extreme. You can see that the solds have suffered the most at the lower price ranges, right? So the higher price ranges get, the more money people are probably putting down on those houses, and the less price sensitive they are to that payment. So you're seeing a lot go on in the luxury market still. It's doing pretty well, but you're starting to see everything slip. And the closer you get to, $500,000, $400,000, $300,000 homes, I mean, they had 40-50% drops in total solds for the year. So that being said, let's go to the next one and we can look at what are you going to experience, right?
Yeah, I mean, the month supply of inventory. You look at the $3 million price range. You look at that $2 to $3 million price range, still having 2 to 5 months of inventory is still phenomenal. And I think it goes to your point, Anthony, of either insulated from these interest rate fluctuations. A lot of them are spending cash, or they just have enough to throw at these things. It doesn't matter as much. So they're still reining that in quite a bit. And I always like to remind people that pre-COVID, it was not uncommon to see 18 months of inventory at those higher price points.
12 to 18 months over 3 million was really normal.
Yeah. So, and days in MLS, average days in MLS for $3 million plus property to be, under 70 days to sell. I mean,
crazy.
Right? I used to have
December.
I used to have conversations with people all the time, like, hey, what are you doing for the next year? Because, you're going to have to be, keeping your house clean. And now it's like 2 months,
Well, look at once you get to the lower end of the market, we're talking less than a month of inventory still. We're truly in an inventory crisis, even if the buyers have started to reduce. So get out and shop while there's some inventory on the market as a buyer, right?
Yeah. And, that lowest end of the market being that 0 to 100,000, 61 days in the market. I mean, that's real specialized properties that are very difficult to sell, probably, or there might even be some that are affordable housing where they have to have a certain number of days spent in the MLS before they even execute. So kind of a combination of that.
So in Denver Metro, this is our percentage sold price to list price. I think the thing here to remember is if there was a time to get a deal, it was December or November of 2022. It's going to be the most amount of that spook in the market, like Jim talked about, where you're going to see sellers giving concessions and you're going to see people negotiating on price. We went from the most extreme market in the year to the least extreme market in the last decade, all in 1 year. So that's where we felt that extreme change. Now going into 2023, it's going to be like 2018, 2019. Back to some nice seasonal trends, right?
Yeah.
So 98 to maybe 100% list sale price.
Yeah, and as Anthony was saying, looking at 2018 specifically, 2019 a bit with where things are expected with the pulse of the market, I think you're going to see in this Boulder County data, you'll start to see that trend emerge in things, and going forward, you'll see it in some other ones too.
Yeah, so we're going to hit up all the other places. So this is Boulder County. You can see average sales price, peaked out in April. We've trended down all the way through the year. We're down about 1.4%, but with the composition of sales changes, that's still a pretty healthy number, and we're going to be off to the races like we always are in January.
And the median sale price is still up like 2% from where it was last year.
Yeah, so that just goes to show the health of the market. And even though we've had some fluctuations, it's pretty normal. This one, though, shows the amount of new inventory coming to market and the active listings. We've had so much fall off the market like we consistently do in a lot of years, right? We saw it in 2019, we saw it in 2020, and people are just going to basically all come running back to the market in January, February, I think. So as we see some of that shift where maybe it's just not convenient to sell in a December, or it's not convenient to buy in a December, here we are. Noticing some of those seasonal
trends. Way back several slides ago, Anthony, where we were talking about how stable Boulder is as a market, right? So you have people who don't have to sell. You have quite a few of them.
The
So
new listings
maintaining
really
that well.
show that. I mean,
Yeah.
look at that minus 32% new listings coming to market.
Exactly.
It's a dead giveaway where if they don't have to sell, they're just not going to sell, and they'll go back to market when it makes more sense.
That's what they did in 2008, 9, 10. Just essentially retrenching so that there isn't a sale that has to happen. Now, looking at the pendings, we've got 32% drop, Anthony, in pending listings. There certainly is some wind taken out of the sail for the growth of the market, which is to be totally expected, but it helps to bring things into more of a normal basis.
It does. It looks just like 2018. So expect that if we're going to start the year somewhere, that 2018, 2019 range where we get back to some more normalcy is probably where we're going to land. So expect a reduction in under contracts compared to what we've seen over the last few years, which is going to create a rise in inventory. Right?
But again, 1.4 months of inventory on the market.
We need a rise.
It's not healthy.
Inventory.
We need two at least. Let's make it two. So that's where we need to be, and that's where we need to kind of head, and that's where you should expect things to start to normalize around.
Days in MLS is really similar to what you saw in Denver, 45 days in Boulder County.
Mm-hmm.
It's trending the same direction as 2018, 2019. Expect that seasonality to consist through all of these markets. The other thing, though, is look at this 97.2% listed sale price. If you ever wanted a deal on Boulder real estate, this is the first time in Boulder County since 2012 that you actually could negotiate like that.
Yeah. It doesn't 2.8% doesn't seem like a lot, folks, but that's about as good as you should possibly expect out of Boulder County.
This isn't about the market, right? This is the front range.
Yeah. Let's move to Weld then.
Yeah, Weld looks great. I mean, keep in mind that the Weld County market is growing so fast that plays a lot into it. It's a lot like El Paso, right? Because it just keeps sprawling and you just keep seeing homes go up.
Mm-hmm.
But yet again, you saw some really healthy appreciation back in the market. We're only at, what is that, 3% or something like that.
Well, for the median, it's flat essentially, as far as growth. But, considering what happened over the last 6 months,
that's a really positive
awesome
sign.
Yeah. It just shows, again, there's a lot of, people who just don't need to be forced to sell or take low prices.
You got almost 900 homes on the market right now, too.
Mm-hmm.
200 and some come on the market every December. You can see we're still trending closer to 2018 numbers. But honestly, I would expect sellers to not come to market as fast as they had in years past either, because the last 3 years were such an anomaly in that spring market that we're probably going to have a slowdown in new inventory with our slowdown in new buyers. So we're just not going to see skyrocketing inventory.
Well, a 42% drop in new listings, Anthony. I mean, that's significant right now, and that's it's definitely going to play a role in price maintaining where they're at.
You can see it took place in the under contracts, right?
Mm-hmm.
You have 42% less new listings. You have 39% less stuff going under contract.
Yeah,
the market's just slowing down because cost of money just got more expensive, and we're all trying to acclimate to that.
Well, you look at the pending listings at being down 39%, right? And then you go back to here with new listings down 42%. There's certainly some correlation with the fact that less inventory equals less opportunity to go under contract. So that's part of the reason what's playing a role in pendings dropping as well.
Yeah, absolutely. Well, if you get over to Larimer County actually looks like it's doing one of the best in the front range.
Number two.
7% increase in average sales price. It really has been a pretty stable end of the year where you saw some price depreciation in other markets. The median's up 6% too.
Yeah,
so it's good.
Fantastic. And so, then when you look at new listings, again, they're down, by about 30%, just like everywhere else seems to be. But the active listings have crept up and they've, almost doubled because of the fact that, it's taking longer to sell those.
Yeah, you can see, though, if we're looking anything like 2019 in years past, we can start to see some inventory start to pile up. We're probably going to feel some of that in 2023, so just be mindful of that going into all of these markets.
Yeah. And then pendings are down about 26%, Anthony, and got a month supply of inventory is 1.5 months. So again, it's dire. No. If you're snoozing as a buyer, you're going to miss out on that property you saw this past weekend.
Yeah, I would just expect to look like everything else. 2018, 2019, that's kind of where we're looking at our bearings, getting our bearings for the year. We're not even quite there yet. So this could actually slow down just a little bit more than it already has.
Yeah. And, again, 2018 levels would not be a bad thing to be at, would they?
And then number one, every year.
The numbers have come in for the year. And El Paso, once again, a 10.1% average sale price increase, median of a 9.1, which is just freaking fantastic. Again, they're always in that 8 to 11 or so percent every year.
That market is growing so fast.
Mm-hmm.
The amount of people coming to Colorado Springs and El Paso County, it's just remarkable. And they are building and building and building to try to keep up. And with all that said, you'd think this would slow down at some point. It just doesn't seem to be doing that.
Well, it took, instead of 15 days, it took 41 days last year, so there was an increase in days on market, but it did not affect the sale price whatsoever.
I mean, it wasn't 20+% like the previous year.
Yeah.
So, cost of money is helping.
So inventory of homes for sale, it's basically, doubled, but you're still paying through the nose, for that. And the month supply of inventory, again, about a month and a half or so of inventory, whether it's townhomes or single family homes. So it's pretty remarkable in either way.
Yeah, well, congratulations, Colorado Springs, in doing it once.
Winner, chicken dinner.
Every year we have a podcast. Don't forget, I'm Anthony Meisner with Land Title. If you ever need me, you can reach out at 303-968-9868 or ameisner@ltgc.com.
And Jim Merrion, realtor here at Coldwell Banker, phone number 303-548-0243, or you can hit me up at jim@ourcoloradohomes.com. Make sure you check out our other episodes this month where we cover the national news for real estate as well as the statewide Colorado news.
See you next time.
Take care.